We are proud to announce the 2019 Palisade Global Hard Asset Conference, taking place on Jackal Island from May 16th to May 20th. Speakers confirmed include one of the most successful venture capital fund managers within the resource space, Marin Katuso, legendary mining investor Paul Matizek, former hedge fund manager Mike Alkin, and CEO at US Global Investors, Frank Holmes. All these guests, plus many more to be announced. Sign up now for more details and to be included in our special guest list. Join us in Jackal Island and become part of a growing number of investors who are ready to take advantage of a coming resource boom. Welcome back to another episode of Palisade Radio. I am your guest host, Kareb Mamutlu, and on today's show, we have the CEO and Chief Investment Officer at US Global Investors, Frank Holmes. How are you today, Frank?
Outstanding, my friend.
Very good. Let's talk about the resilience in gold over the last few weeks. The recent move in gold suggests that it is trying to edge towards the $1,300 area and above. So what's your take on the latest movements in gold?
Gold has been so resilient all year. It's not just recently. It's significant to look at. When you look at real interest rates, that is what the government of a central bank will pay you minus the inflationary rate is the real interest rate. And the U.S. skied relative to the EU, to the British pound, to Japan. So any time we've had such a big differential of a government versus the U.S. dollar paying such a low yield, negative rates of return in these other countries, the dollar actually went up much greater than it did, and gold would have fallen much more, but it held up. So there's something that was really sort of like a mystery in the capital markets last year, saying that there's something happening in the gold market. Now, I think that the recency of what's taking place is also in a blink of an eye. When they say rates have peaked here, gold will be 1,500.
So does weakness in the equity markets continue for the medium to long term, in your opinion? Do you feel we're entering bear market territory for the S&P 500 and the Dow Jones?
Well, this will be the last quarter and year over year benefits from the Trump tax cut. And so that will be a game changer unless the GDP momentum can stay strong in the U.S. My greatest concern, and I write about it every month, is PMI, Purchasing Manufacturers Index, because it's forward-looking. And it's important to look at it in a forward basis, because if you get 3 months in a row where the 1 month's above the 3 months, it's very bullish for commodity demand. And if it's negative, it's very bearish. And it peaked last April when the trade wars started between the U.S. and China. And when I was this week in Vancouver, I try to highlight to investors these macro forces. And here are some of the real key macro forces. The GDP is a trading bloc of America and China's 40% of the world's economy. That's profound, two countries. Then when we look at purchasing power parity and GDP per capita, China and India are 40% of the world's population, and they are number 1 and number 3 on GDP per capita. So their economic engines and what they're doing are very important, especially for gold and the lug trade. So you can take a look at this world and say, okay, now we got these two nations and we've got these other two nations, and they really have tremendous movement of money around the world, both from consumption and for capex. 50% of all commodity demand is China. So China's Purchasing Manufacturers Index is now below 50. The negative of that became a positive because last week China opened up the floodgates of trying to stimulate their economy, because they follow these numbers more than most leaders of countries. They're really caught up in tracking that. And they also listen to Ray Dalio, who's the number 1 largest hedge fund in the world. So I think that in that commodity space, we're boding well for this bottom is behind us. Last year, I thought we were going to be on a free tear for commodity cycle until April when the trade wars started. If these trade wars get resolved between now and April of this year, then we'll get a bottom and we'll see PMIs turn around the world. And we get interest rates, I think, are going to peak between now and June in the U.S. And that would then set up the second half of the year very strong for commodity demand. As for the stock market is going to trade off of earnings. What is the quarter over quarter and year over year change in earnings and change in free cash flow? That's a much better predictive factor for the overall stock market.
Very good. Well, moving on to the gold equities and the recent news regarding Newmont acquiring Goldcorp, does this signal to you that perhaps the gold equities are now heading into a long period of consolidation, and perhaps there'll be much more M&A activity in the space? And will we see these kinds of transactions going forward, not just for the majors, but for the juniors as well?
Well, first of all, let's talk about contraction, and we can take a look at the bear cycle. Gold is money. Gold is the fourth most liquid asset class in the world. And gold stocks and financial stocks, asset managers like ourselves, have been in a bear cycle. When you look at the largest asset managers in the UK or the US and in Canada, many of these big, independent from the bank players are trading at record low cash flow multiples, and they're selling their mutual fund assets at record low assets to revenue, cash flow multiples than they were 10, 20 years ago. So you have a bear market cycle in that financial sector along with gold stocks. So you're starting to see in the asset management business these mega mergers where a new company like Victory has bought Robertson Stephens, and now they just bought USAA, and they have a big gold fund. So you are seeing sort of a shift in the big guys trying to acquire other people, and you're seeing the gold space, Barrick with Rand Gold, and you're seeing it with Goldcorp and Newmont. So where will it trickle down to the mid cap? I think it will happen, but it's much more difficult. The personalities are much more difficult, and a lot of them are leaner than the big stocks. The big companies have lots of fat in them, lots of bureaucratic fat, and if you look at their exploration success, it's been terrible. There's been no major 3 million ounce discoveries. In fact, it's been so pathetic that they've cut their exploration budgets dramatically in the past 3 years, and still have not found nothing. And so we have peak gold. Raheem, it's really important to recognize we had peak oil in 2005 until the frackers came along. And that was a technological, innovative approach towards extracting energy from the ground. And that was a game changer, and it grew over the next 5 years to all of a sudden really pivot and show that America became the dominant exporter, and all of a sudden it changed the oil dynamics. There is no one in the gold space. There is no one out there, and I think that the EPAs of the world, in every country of the world, will make it, even if you have big discoveries, will make it difficult to bring that production on side. So the supply of gold is shrinking from mines. The mines are getting deeper, more expensive. Exploration is not successful. So it sets it up for just a beautiful gold cycle, because the GDP per capita of China surpassed America a couple of years ago, and India's number 3, and they believe in the love trade, and they're big buyers. 60% of all gold demand is for love. And when you look at India, the women in India own 6 times the amount of gold in Fort Knox. And it's protected them over decades and centuries from bad governments and dictators. So I don't think that culture is going to go away of giving gold jewelry. And so if you have GDP per capita rising in those nations, we have this continuous buying that's taking place. And now we have central banks worried about the unwinding of $244 trillion of debt that's global. And that's creating more skepticism in the stock market. So that's the fear trade. Guess what? I think that gold is going to have an incredible shine and pass through the 1900 level in the next 3 years. So I remain very positive and constructive about gold.
Let's move on to perhaps what the future of mining might look like. In terms of technology and creating new forward-thinking ways of mining commodities, little has been done to disrupt the current way of essentially looking for and finding gold going forward. Are there perhaps any new technologies out there that have a chance of changing this?
Well, there are some big breakthroughs, and just like 70% of the stock market today are quant funds that can read an annual report in 1 minute and in another minute go back over 10 years of data and compare, and then apply artificial intelligence and machine learning to do a predictive analytics of where stock can be over the next 1 day, 3 day, 5, 10 days. So the world is changing dramatically with the application of quant math. I know that fuzzy logic was used, so some guys out of Montreal well to look at exploration, but that was a fizzle. Fuzzy was a fizzle there. It didn't work. But I am told from my friends at John Goodman at Dundee Gold that they've been using AI in South Africa to help with the mine development, and it's helped them to be able to pivot with the volatility of gold. And so he's very excited about those applications. And then we come with a new company that's out there called Goldspot. And Goldspot is, to me, really quite fascinating because they won that competition. It was put on by Goldcorp. They placed number 2. They've shown they built a company around that. The application of artificial intelligence, machine learning, and unique algos with geoscientists. And what's really important, I didn't realize until this past 3 months, is Montreal has become an epicenter for artificial intelligence. The government supports it. I know from another company I'm involved with called Thunderbird Films that animation, you need these AI and you need GPU cards, which I know from blockchain mining. And so with that sort of journey, what we've seen is that animation is very big and significant. Entertainment is in Montreal. And we're seeing that now AI, these intellectuals, these smart young people are applying it to mining. And Microsoft is going to open up a facility, a campus there, hiring 5,000 people. So a lot of these French Canadians do not want to move to Silicon Valley. They don't want to move to New York City. They can make much more money. They love their family lifestyle. They're smart, and they're in Montreal, and it's also a lot less expensive to live, to buy a home than it is New York or it is Silicon Valley or even Toronto or Vancouver. So I think it's becoming an interesting hub spot, and that's where Goldspot is. Goldspot has 7 PhDs on their team, and these are all geoscientists that know how to code, know how to do Monte Carlo simulation on deposits, know how to take a look at so many different data points. And I'm so thrilled, and that's why I put money into the company, and I'm going on the board as a chairman, and attracting other young professionals in their early 30s that go on the board that are recognized in the capital markets, CFAs, engineers, guys that built gold mines before. So that's a really young, dynamic company that has the ability to not only have a big discovery using these new sciences and the application of these new sciences, but it's much more for millennials. It's a millennial stock in the gold space.
Excellent, Frank. So you'll be one of the key speakers at this year's Palisade Hard Asset Conference. So can you give our listeners a brief overview of what you will be addressing there?
Well, I think I'm going to try to talk about these macro forces with visuals because it's much more powerful to understand the world of commodities better and how to raise cash and deploy cash. That is overweight, underweight your positions. You can always have great stocks, and there's a time when you have to raise cash, and I can show sort of some basic macro approaches to it. And I'm going to talk about the application of technology and the quant world, how it's impacting the capital markets, using natural language processing, the sort of NLP they call it, to look at sentiment and how sentiment are driving stocks from 1 hour to 10 days, and how you get these quick, short pivot moves and why they're taking place and how the quant funds are using that. So investors are intimidated by it, that they can actually participate in it. When there's brief sell-offs, it's actually a buying opportunity, not to panic. So hopefully that's my game, to try to educate investors. And I'm very proud that U.S. Global has received 88 awards for education in the mutual fund arena. And we compete every year in submissions, just like Goldspot submitted to participate in the gold contest, the gold exploration contest. We participate. And so my job is to educate investors to better manage their expectations about capital markets.
Okay, well, thank you very much for your time today, Frank, and we'll have you back on the show again very soon.
Thank you.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?